Hey everyone, welcome back to Corporate Decoder. Today, TVR just filed an 8K, and I'm seeing a significant expansion of their at-the market offering that you need to know about. Quick note, this is not financial advice, just my take on public filings for educational purposes. They are essentially doubling down on their stock issuance plans, and we need to unpack what that means for shareholders. So, what is this filing all about? Tvardi Therapeutics, or T.V.R.D, you know it, has filed a current report, which means something important has happened that the company needs to tell us about pretty quickly. The main event here is about how Tvardi Therapeutics can sell more of its own stock. Remember back in May of 2026, they set up a deal with a company called Jonas Trading Institutional Services. This deal, called a Capital on Demand Sales Agreement, lets T.V.R.D sell shares of its common stock if and when it wants to. They originally planned to sell up to $12.5 million worth of stock under this program. Now fast forward to the 17th of July 2026 and they have announced they are increasing this program. They are adding up to $9.69 million more to what they can be selling. So on top of whatever they might have already sold, they can now sell an additional $9.69 million worth of shares. Think of it like this, they had a bucket to sell stock, and now they are adding a significant amount more to that bucket. Now, there are rules about how much companies like Tvardi can sell on what is called a baby shelf. This is a regulatory term that basically puts a cap on how much a company can offer at certain times. Tvardi's ability to sell stock is tied to the market value of its shares held by people who are not company insiders. As of the 16th of July 2026, this value was calculated at over $62 million based on almost 12.5 million shares trading at $5 a share. For context, the price of $5 per S-share was the closing price on the 8th of July 2026. Over the last year before this filing, Tvardi had already sold about $11 million worth of stock under this agreement. The key takeaway here is that they are now saying no more stock will be sold under the original sales agreement prospectus beyond what this supplement covers. This implies that this new, larger amount is essentially the final push for this specific offering period. They are also filing legal opinions to back up the fact that these new shares are valid to be sold. This is standard practice, but shows they are covering their bases legally. So what is the big picture here? Tvardi is essentially raising more capital by selling more shares of its stock directly into the market. This is often called an at-the-market or ATM offering. For existing shareholders, this can be a double-edged sword. On one hand, it means the company is getting more money to fund its operations, research, or whatever its business needs are. This could potentially lead to future growth. However, and this is crucial when a company sells more shares, it dilutes the ownership percentage of existing shareholders. Imagine you own 100 shares out of 1,000 total shares. You own 10%. If they issue another 100 shares, there are now 1,100 total shares, and your 100 shares only represent about 9.09%. Your piece of the pie gets smaller. This filing tells us that Tvardi Therapeutics, led by CEO Imran Alapai, is looking to secure additional funds. Given their market cap is around $30 million, and the stock price has seen significant volatility recently, as noted by headlines highlighting both rallies and drops in July 2026, this move to raise more cash is a significant one. We've seen companies on this trading range, like T.V.R.D, use ATM programs to stay afloat or fund development. When companies with a market cap below $500 million execute these large secondary offerings, it is often a sign they need the cash to survive or reach their next milestone. Historically, companies that do multiple dilutive offerings can see their stock price pressured significantly downwards, sometimes by 70 to 90% over the next year or more, especially if they are unable to show substantial progress with the new capital. They've also listed out the exhibits, which basically includes the legal opinions supporting this stock issuance. The main point to remember is that Tvardi is making it easier for itself to sell up to an additional $9.69 million in stock. This gives them financial flexibility, but it also means existing shareholders will own a smaller piece of the company going forward. It is a move that signals the company's need for capital and its willingness to issue more shares to get it. So, my take on this filing is that Tvardi is prioritizing securing cash. The significant increase in their at-the-market offering capacity suggests they have a clear need for funding, likely to drive forward their development pipeline given the small employee count and market cap. The risk I am watching is the potential for continued dilution if these shares are indeed sold rapidly without corresponding tangible progress in the business that can justify the increased share count. What I am actually looking for is how effectively this new capital is deployed to create value that offsets the dilution for shareholders. Oh, and the research tools I actually use are linked in the description. They help keep this channel going. That is my take. Stay decoded. Like, comment, subscribe, and join our Discord.